oil technical analysis for the October 19th session, looking at the candle that had formed for the Tuesday session. You can see that we did have a fairly bullish move, but it does still sit underneath the $90 mark, which of course we see as massive resistance. And until we get above 90, it's going to be very difficult to get bullish of the light sweet crude market for any great length of time. Should be noted though, there was a volume spike, and this is very bullish, but again, we need to see a close above the 90 mark. Otherwise, we just think that it is still in this range because basically ranges, unfortunately, the only way to truly play them is to understand that they are considered to be valid until they're not. So a daily close above the $90 mark would get us bullish. However, we are more comfortable selling at this point in time, so we would think about selling on signs of weakness should they appear. Looking at Brent, it was a little bit different situation for the Tuesday session. As you can see, we had a hammer form after we fell and then pop back up. But again, we are in this particular market looking at the 115 level as massive resistance, and until we can get above that on a daily close, we aren't overly bullish, especially at these levels. It's going to be very difficult to continue this move because it's just been so parabolic recently. However, alternately, on a hammer like that, if we get a break below the lows, that's a massively bearish signal, and we'd be more than happy to sell at this point. So then we need, again, the daily close above our resistance, which is 115 at this moment in time, or we need a breaking of the bottom of this hammer, which of course turns it into a hanging man, which is a very bearish sign. In the meantime, though, we are willing to wait for either one of those two events before we place a trade.